Hey traders, Richard here, and in this video I'm going to share 5 essential tips to help you pass your prop trading challenge successfully. So the first thing or the first step is to understand the challenge rules and objective. Each prop firm has its own set of rules regarding profit targets, stuff like drawdown limits and trading restrictions. So make sure that you carefully read and understand these rules to avoid unnecessary disqualifications. Again, pay special attention to those daily loss limits, your maximum overall loss, max leverage, and profit targets to ensure compliance. For example, if you were to go here to the Hollow Prime website and go to the challenge comparison, there will obviously be different challenges and different account sizes that you can take on to try to pass, right? But it's really easy to say, yeah, it's just go read these things, but you need to really memorize it because there's a lot of traders actually fail by not understanding the stuff like the maximum day loss limit, your maximum overall loss, the maximum amount of leverage that you can be using. All right. Is stuff like news trading allowed? And with Hollow Prime, it definitely is. And can you, for example, hold trades over a weekend? All of these things are pretty self explanatory. But like I mentioned, especially for beginner traders, they just want to get on with the business of trading and pay very little attention to these very, very important rules, like your losses, for example, that you can take for your daily or your maximum overall losses. Right, so make sure that you do memorize those. Make sure you know what these are in a dollar value, whatever the account that you're trading with. So, very, very important. Yes, it's self-explanatory. Go and read this, but we do have, or we see a lot of traders actually fail a lot by not really understanding or taking 100% note of things like your risk management. And this is encompassing your risk management. If you have proper risk management, then you'll avoid these daily loss limits and as well as your overall loss. All right, so that's the first tip. Let's move on to the second one. For my second tip, build a clear and realistic trading plan. So, a well structured trading plan is really essential for your success. You need to define your strategy, which strategy you want to take. What's the risk per trade you're going to take? Which trading hours am I going to trade in? Which conditions am I going to trade in? So, you really need to stick to your plan and avoid those impulsive decisions, right? That helps you build discipline and as well consistency. If you look at a chart, for example, here, are you going to try to be a breakout trader? For example, I like to trade corrections, try to figure out where those corrections might end, and then trade to the upside. What time frame are you going to be trading? Do you want to be a scalper, a swing trader? So it's really easy to try to just land on a decision, taking all of these different metrics into consideration. But a lot of us, for example, might have time constraints. Do you have another job or main job? Is trading going to be something that's going to supplement your income, or do you want to save a little bit of extra money using or trying to make money out of trading? What's your time constraints? Can I only trade a few hours a day? Which markets would be best suited for that? There's a lot of decisions that you need to work into this. All right. So very important that you have a clear and concise trading plan, and also try to stick for it for a while. One big issue that a lot of new traders have is that they jump from one trading strategy to the other because they don't see immediate results. All right, so it's very important that you keep your expectations really in check and try to avoid jumping from one strategy to the other. Yes, try as many as you want to. Some might fit your personality more than others. So you're going to be a scalper, swing trader, day trader, whatever the case might be. So a really, really important consideration to take. For my third tip, it's really advisable that you backtest and forward test your strategy before you even start considering trading a challenge. Test your strategy on historical data, also known as backtests, as well as try them under real life market conditions in a demo account. This will really help you refine your approach and build that confidence that you need in your system, ensuring that it performs well under all kinds of different market conditions. For example, just looking at a chart here, and depending really on what type of strategy you want to take. Go take some time, get a piece of pen and paper out or an Excel sheet or whatever the case might be. Go to your favorite market, the time frame as you decided to use in your strategy, and scroll back in history and go find those trade setups as if they would have be under real live conditions, and then go and obviously with your risk parameters, your profit targets and all that sort of stuff, see if that strategy over at least, I would say, uh, it's easy to say 100 trades, but that is definitely a recommendation that I would make, to go back as far as possible the data that you have and go see whether this strategy that you're trying to implement or going to trade under real market conditions is actually going to be profitable or not. And then go and trade that, what we call forward testing, under real market conditions, potentially a demo account. And, log those trades, keep a trading journal, and see whether over a extended period of time, whether the strategy is actually profitable or not. This will also help you obviously keep those emotions in check, and help you to understand and build that confidence, which is really, really important in your own ability as well as your strategy. Okay, for my fourth tip, it's absolutely essential that you become a master of risk management. Risk management is really the key to passing a prop trading challenge. Now, whether you're trading or risking 1% or 2% of your account, whatever that might be, always use stop losses. All right, that helps you avoid those unnecessary losses that you can take. Don't move your stop losses. That's really something a lot of traders do when they actually get into a trade. It's not going their way, and they start moving their stop losses around and actually increasing their risks. Right? So always try to aim for a higher risk reward ratio. For example, if you risk 1% of your account, try to aim for potentially a 2-to-1 or 3-to-1 reward. Again, this is completely up to you and what your trading strategy will define. I can go through all these types of different charts, different types of setups. For example, as I mentioned previously, I do like trading the end of corrections, like over here, for example. So if I were to take a risk, I would, for example, want to see that there's enough space to a previous high. Again, this is now obviously in hindsight over here. But if I were to, for example, try to get in around about here, we also had a previous top there. Again, I don't really want to get too technical here, but I think for illustration purposes, this is really essential that you do understand that. Always use a stop loss. Make sure that you're not over leveraging yourself. So you really need to become a master of managing a risk, and managing risks, also managing yourself and the emotions that go with that. For example, if let's say you got in down here, for example, if you were to risk 58 ticks on there or pips on there, a 2-to-1 would obviously be more than that. Is that target that you're placing? This is again defined by your strategy. Is that a realistic target to set? Are you going to take profits along the way? Again, that also comes back again to your strategy. But again, risk management is really the key to success, to passing a prop trading challenge. For my fifth and final tip, it is really important that you learn how to keep your emotions in check. Emotional discipline is really crucial. So, common pitfalls that really plague a lot of traders is revenge trading, overtrading, or deviating from your trading plan after a losing streak. So, it's really important to stick to your strategy, and also remember that trading firms are actually looking for consistency, not just big wins. All right. So to really master your emotions and that psychology behind it is really, really important. And that will set you apart from those impulsive traders. Whether you're going to be a scalper, again, try to figure out under live conditions, whether it's in a demo account or whatever your preference might be, that you can handle that pressure. Can you make many trades per day? Can you handle a drawdown? And the only way that you're going to learn that is really by trading it in under live trading conditions, and also building that confidence during your back testing and also your forward testing, which I talked about a little bit earlier. Right. So again, confidence in your strategy is also really key, and that helps you to overcome those emotional, psychological damaging effects that can really, really ruin your trading account and force you to also then break those rules that are set by your trading prop firm. Right. So these are 5 essential tips that I've shared with you guys. I hope you enjoy them. Again, some of them might be self-explanatory, but a lot of traders do overlook these very, very important points that I've made. So before you do start, if you are a new trader or struggling to pass a prop trading firm, maybe take a step back and decide on your strategy. Um, Again, proper traders, or I would say proper traders, but really experienced traders that's actually been around long enough, are real masters of risk management, all right, which is absolutely key to this. And then again, obviously, things like emotional or psychological control all fit into things. So it's like a whole lot of things that you really need to understand or get a good handle of to make things work for you. But again, hopefully these tips helped, and take note of them. And I hope they do serve you well in the future. Thanks for watching, and I'll see you in the next one. Take care and goodbye.